Howdy, howdy. It is the Friday lunch hour, and I want to welcome here at Inside Production Studios in Phoenix, Arizona. And for the next 30 minutes, we're going to talk about your money. We're going to be building your wealth and quite possibly those hot stock tips that we just never really get around to. But that's what we do here. My name is Rob Morales from our studio network. Good people, better business, discovering the best of you. And we do have a very special guest I want to welcome today. It's a little bit different. Finance Friday Frank is not here. We'll be taking questions live. If you want to type in those questions as we go, just go ahead and type them in the comments section. If you're watching on YouTube, hit that subscribe button with those likes because we love the likes, but we love the loves too. Um, uh, we're here. It is Friday. Senor, I want to welcome our special guest today. He's a very special guest of mine. His name is also Henry, but his last name is Morales, just like mine. Hello, Mr. Henry Morales. Welcome to the show.
Hi.
You have no blood relation to me, right?
I thought we did.
Oh, okay. Yes, sir.
Brother, remember?
I was trying to be a legitimate guest, but yes, if you can see the screen there, his name is very common to mine, and he is my brother. Hello, Henry. How are you?
How's it going?
So we're here on Finance Friday. I know you have a lot of insight regarding your finances and how you can help people.
But I'm not a professional. Remember that.
We're not professionals. No, we're just commentators. We're entertainers. We're here to provide information, which may or may not help you in finances, but we are not financial advisors. So please seek out any information regarding financial advice from a person that knows better than us. Yes, sir. How are you today?
Doing good. How's it going?
It's Friday lunch hour.
How's Arizona?
It is brisk. Is that a word still? Brisk.
Brisk.
It's what in the 80s, slightly chilly, slightly warm. It's a little toasty. How's it over there in oh, by the way, you're in Sacramento.
Sacramento, California.
It's
a rainy day today.
Could you please have your people stop coming to Arizona and living here?
Raising your real estate prices.
Well, yeah, I mean that does help out the real estate market. Just put a little extra money in my pocket for drudgeries and scandalous events. But we won't get into that because today is Finance Friday.
Finance.
Yeah. So anything in the stock market? So I noticed things were going a little crazy this week. Things were we had a big dip yesterday in the stock market.
A little choppier, more volatility for sure.
We did have some news released this week. The Fed released some news. If you don't mind me sharing, sir, I will go ahead and go to that now. So these are some of the economic projections that the Fed released. Basically, everything's rosy, right? Everything is just wonderful.
That's what they're saying. They basically, Powell just made a commitment to continue bond purchases. So they think the economy is doing well. And I think a little of the uncertainty in the market is investors get a little nervous when they're not sure. So you saw people selling or interest rates rising, and people are worried about inflation, basically. So you have the Jerome Powell committing to letting the economy run hot, and you have the government sending out money, printing money, basically. And so that's the definition of inflation. And so with inflation, bondholders get nervous. They want to get rid of that because the government is saying inflation is 2%, but it could, if you're in bonds and you're getting paid, 0.5, 1%, then you're going to be losing money over time. So in a high interest rate or a high inflation environment, you don't want to own bonds and you don't want to own cash.
Well, not too many people really own bonds, right? I mean, that's really large corporations, people that are making large commercial deposits. I don't really know many people in the bond market per se.
Well, it's a lot of the hedge funds, the people with lots of money. They're really the ones that control everything. It's not like the small Robinhood, me or you. We don't have enough money to influence anything. So
I'm not a Robinhood guy though. How many GameStop stocks do you own?
GameStop? I don't have any GameStop.
Yeah, no buy and hodl, huh? So buy a hodl for Henry.
Buy a hodl for. I'm a Bitcoin buyer.
Uh,
So
Bitcoin,
what's that?
How much Bitcoin do you have?
I have a little bit of Bitcoin and Ethereum.
You won't get into personal. That's okay. We're not here to talk about your personal portfolio, Henry, but I didn't want to bring up a point that you did. We have a 10-year treasury. So the interesting part about the 10-year treasury, as I pull it up, it really dictates where our interest rate is regarding our housing. And when you have the treasury, the federal government doesn't have any say so in the 10-year treasury. And if Frank were here, he could probably allude or at least give some insight on that. But you can see the 10-year treasury has been rising since January 2021. It's gone up nearly a full point. And when you see the rise in the 10-year treasury, there is an impact in housing. It's the 10x effect. So for every point rise or fall in the treasury, you do see about a 10% fall or rise in the and the appreciation regarding housing. And so we've nearly gone over. Let's see, we've nearly gone over a point in our 10-year treasury, which again affects housing. And so housing is just one segment of our market. But to your point, I mean, everything is affected by what the government does, and the 10-year treasury has no effect from that government. So no matter what they try to do, no matter what guardrails they try to put in place regarding interest rates, they can't control 10-year treasury.
Well, they try to control it. They do bond purchases. So that's what the Fed does. So they do have an effect on interest rates. But if you look at that chart, I think you only went back to September. So interest rates were really low because of the pandemic. So the 10-year yield was down to like maybe 0.5%. So, and it's gone from 0.5 to, you're correct, to like 1.7.
Yep.
So, but I mean, historically, if you look at interest rates, 1.7 is still relatively cheap.
Yeah, and so
it was around 1.7, I think, before the pandemic. So,
let's go back. I mean, since we're here, we'll go year to date, 6 months. Let's go year back. So let's see, March of last year, we were roughly. Let's see if I can get that.
So the government is buying. They're buying bonds. That's what Powell said. He's committed to doing that. But it's the money managers, people with money. They don't want to be in bonds because there's a risk for inflation. So when you print a lot of money, the dollars that you own get diluted. So your purchasing power decreases over time. So if in like 1900, you could buy a hamburger for 10 cents, and now you need like $10. So when you have high inflation, you don't want to own bonds and you don't want to have cash. So people will tend to buy the stock market. You want to be in the stock market. You want to be in real estate. And then traditionally, gold was the inflation hedge. But I think now with Bitcoin is like gold 2.0. So those are the things that you want to own. That's what will appreciate over time. And so that's why you see this raise in interest rates. But also when you see interest rates, it does put pressure on borrowing costs. So now, companies that have debt have to pay a little bit more money. So that's where the uncertainty comes from. And that's why you see it really affects the smaller companies. So which you would call like the high flyers, the ones with high valuations, high PEs. If you look at like, I would say there's probably in the economy right now, there's probably maybe 3 major sectors. You have these young growth companies like the PayPals, the Zooms, high growers, and then you have the bigger tech, which are things like Google, Apple, Amazon. And then you have these, what some people call value trade, where you have where what was most affected by the pandemic. So those are your 3 general sectors. And so when you have this increase in interest rates, all of a sudden people, they are unsure what that will do to operating costs. So they tend to sell off, and they have sold off a lot of the high flyers. But again, markets go up and down. And that's where you get opportunity. When you have volatility and prices drop. So when you see some of these, companies going down 40, 50%, if you're a long-term holder of those companies, then that gives you the opportunity to buy them cheaper.
Well, you don't think like the dollar in itself it's basically a baby bond. There's really nothing that the dollar is backed by now. I mean, it used to be the gold standard, but after Nixon and his executive order made that into basically a bond itself. I mean, it's a baby bond. It's not one of those big, hedge fund bonds, but it's a baby bond because there's really yeah. And there's nothing backing it really whatsoever. So, when you have a market that's so volatile and gold is declining and it's not really that standard anymore, wouldn't it be advisable to hold on to money, in this kind of market environment, just for your purchasing power because everything else is going down?
Well, over time, remember your dollar. So if you have, let's say you have money sitting in the bank over time. So if you have $100 in a couple of years, that will have $70 worth of purchasing power. Because if the government is printing 2 trillion last year, another 2 trillion this year, potentially they want to do infrastructure spending, 4 trillion. I mean, it's like they were saying 25% of all the dollars was printed last year that has ever been printed. So when you have cash, then and the government is diluting it, it loses value over time. So that's why I'm saying so the general goal is to accumulate assets. And so that's why I'm saying the stock market, real estate, Bitcoin.
So what are you buying with your Stimmy check? I'm buying some new set of tires. I'm just kidding. I'm actually spending it on something that I need to fix.
There you go. You're increasing demand.
That's what I'm doing. I'm stimulating the economy.
You're raising prices. So as we continue, you see the housing market is increasing. That is in hyperinflation. I don't know. Do you think when you go out to dinner? I went out to dinner the other night, and I want to say it was maybe 10-20% a little more expensive than that. Also has something to do with the pandemic, but.
What I did notice was it's the same prices, but the portion sizes are a lot smaller.
Yeah.
I got my caramelized cauliflower from Peter Jungle, and that thing was like huge. It was almost like the whole head of cauliflower. And yes, I do like those things. And then when we actually ordered it, we were like, hey, what is this? What is it? It's like, no, we have to portion. Upper management basically says that we have to watch the amount of product that we had. I'm like, it was like maybe a quarter of the head. But I mean, it is a noticeable difference, especially with gas prices too. I mean, I'm going to the pump. I think I spent around Christmas, I think I spent about, roughly $30 for a full tank. And now it's getting up to about 50, and that's Arizona prices. I can only imagine what it is in California.
Yeah, I don't even know, but what I've heard is gas prices are going up. But.
Oh, that's right. You got the Tesla. That's the goal. You don't spend any money in gas. That's very smart of you. That's a very smart financial decision to do. And the tax write-off too. Get taxes off them.
Mm-hmm. Anyway.
Oh, sorry. We're getting personal. So I did want to bring up the chart. So the Fed released their annual or their quarterly report, and they give a favorable projection regarding GDP. We have unemployment. So GDP, they're saying by 2022 we're going to be hitting a GDP between 2.5 to 4.4, and this is a projection. It's not speculation. See down here where they gave the PCE inflation, the projections were a lot lower than they are what they're anticipating, I should say. Unemployment rate the same way. I mean, unemployment projection in December is 4.0 to 6.8. Unemployment rate in 2021 is looking between 4.0 and 5.5. And right now we're roughly about 6.2. In Arizona, it's about 6.7. And that's something, again, to kind of be mindful of as far as building our economy and coming back from this pandemic. They're giving a favorable projection. When Jerome Powell came out, everything was rosy, right? It's basically, my synopsis is shit at the fan. We know it hit the fan. Didn't stink as bad as we thought it would. everything should be fine. We'll just clean up the blades. Gotta go. So, you know, and in that favorable projection, he basically saying everything's going to be fine. And I think, you know, the way media operates and the way the government operates, they do want to give a favorable position regarding our economy because they don't want people freaking out. And that's usually the largest part of what you know, our economy is based on is emotion more than really anything else. Because you don't want people freaking out. You don't want people like going and pulling their money out of the banks like they did for the Great Depression, you know, lining up, waiting for their waiting for their little pile of gold or whatever it is. You know, so a large part of our economy is based on emotions, and so I wouldn't anticipate them giving anything other than something favorable, right? I mean, from your experience, sir.
Right. Well, I mean, I think they want to stimulate the economy. That's basically what they want to do. So that's what the bond purchases are for. They're to try to keep the interest rates low. They're sending out stimulus checks. So
Stimmies.
the stimmies. So that means demand will go up for things. Usually that means that wages will go up. So I mean that would be the best case scenario is low rates and recovery where the economy is growing.
And everything that I'm seeing too, from a real estate side, real estate has been historically, I think, better than gold. I mean, one would argue that because it is a real asset, an asset you can leverage off on. If you buy stocks in gold, you really can't you can't really rent out a gold stock. I mean, I guess you could if you're selling up, you know, options, whatever. But as far as like a safe and a favorable place to store like money, like uh, with the bond market the way it is insecure as it is, pulling out your money from your 401k is probably not advisable, you know, for wealth projection. I mean, for Frank, I'm sure he would be yelling at me for that for saying that, but you could essentially pull out money out of your 401k and place it in real estate because you know over time that it's going to appreciate, and it's going to appreciate it at a probably a more favorable value than, let's say, your a 401k or even a stock.
Mm-hmm. Yeah, well, I think it's been shown historically that if you want to get wealthy, you have to own assets. And that's if you look at the wealthy people. If you look at like the Trumps, they do it through real estate. If you look, you can also do it through the stock market. So there's benefits, pluses and minuses to both. I mean, I try to do both, but I would say I probably have more in the stock market than real estate. And the other thing would, like you're saying, so gold, money has kind of gone through a revolution. And in the beginning, you know, you had the barter system, then you went to gold and metals, and then you went to money, paper money. And so the problem with gold, or the problem that paper money solved with gold, was the portability issue. So you can't really walk around with a pocket of rocks. And then when you get to the store, it's not easily divisible. So it's like, okay, how much is this bread? A sliver of this, let me just cut, you know. So that's where the paper money kind of solved that issue. And you see an evolution from paper to now credit cards and online. And then I think the final end to that is cryptocurrency. So what cryptocurrency solves for money is the security issue. So because of the technology, because of the blockchain, it's very difficult to counterfeit Bitcoin, unlike regular money. So governments like that. They don't like people just faking money.
Well, the thing with Bitcoin is they can't control it. They can't manipulate it. So they can't produce more Bitcoin, or they can produce more dollars.
Well, that's the other thing. So that's the other advantage over paper money, is that you can't manipulate it. But it retains all the other stuff. So you can carry it around on your phone. You can divide it. You can use it to purchase money. And then it's also secure and it's not manipulated. So it's an inflation hedge. So like if you have dollars and the government is printing trillions more, your dollars become worth a little less. But if you have Bitcoin, there's only a certain amount. And so as more and more people want Bitcoin, the price increases. So that's why you want to hold a little bit of that also.
So it's a suggestion, not the financial advice, but
not a financial advice to anybody. I'm just saying this is what I would suggest to myself if I was giving myself advice, which
if I was talking to you, talking to me, looking at this video, then I would tell me to buy Bitcoin.
Well, I think so. A lot of people, I get a lot of questions, from work as far as, Bitcoin, should I buy? And I think as a general rule, if you're looking at an asset and you feel like FOMO, like, oh man, I should have got some of that. In general, you're a little too late. But I think with Bitcoin, it's a little bit different. I think we're still pretty early in the adoption phase. They said that of all the people in the world, only 1.7% of people have any Bitcoin. So, and it wasn't even until like last summer when this was mostly driven by the small trader. Last summer, the government's allowed banks to hold Bitcoin.
Well, I do know PayPal is accepting Bitcoin as a payment, but they're consequently also converting that straight to the dollar right away. They're not holding on to Bitcoin, so there are some.
No, they have
still a little volatile.
They have some of their assets. So basically, what companies do is they have, like, let's say, for example, if you're a bank and the government says, well, last time you guys screwed this up, so you have to have a certain amount of cash sitting in your vault in case of an emergency. And if you, again, if we're going into inflation and you have a bunch of cash sitting in your bank, the bank is kind of like, well, maybe I should put a little bit of that into Bitcoin. You see like Tesla doing the same thing. They're putting a certain percentage. I think this week it was like announced that Visa and Morgan Stanley now will offer people an opportunity to buy it. So you wouldn't have all these people buying it if it was, not a real thing.
Yeah, and so my name is Robert Morales here with RCU Network with Henry Morales, my brother, who is not a financial planner,
I'm not a financial advisor.
We're just a couple of YouTube guys, getting on, talking about finances, all that stuff. And since we're here and we're talking about this stuff, I figured I'd just pull up Bitcoin price. And, if we have about 10 more minutes while we finish up, Bitcoin is trading at, roughly 58,000 a share. I mean, is that overvalued? Quite potentially, I guess it depends on how much you believe in the Bitcoin and the projections. I mean, people are saying could it go up to 100,000 a share? I mean, I could never have imagined 58,000 in relatively a short amount of time. Look at the year over year. I mean, last year we were looking at barely hitting 6,000 a share. Now we're over 1,000% at nearly 60,000 a share.
Bitcoin has since I think it was 2011, 200% return every year on average. So it's done well. That is true. But I mean, you don't know what. Let's just take the worst case scenario, and people just consider it as a store of value. I think they look at gold and they see, okay, gold is worth $40 trillion and Bitcoin is worth $1 trillion. And again, I mean, there's potential that, okay, maybe we can use, you see Ethereum with smart contracts and DeFi, this is what PayPal and Square are kind of, if you believe in more peer-to-peer consumers interacting with each other, then you want to own these kind of names. But let's just say that, even like a quarter or half of the people that are invested in gold decide like, oh, this Bitcoin is increasing, I want to get a little piece of that. I mean, then even if it takes 10 trillion out of the 40, then you're looking at 10x. So you're looking at Bitcoin at 500,000 at some point. And that may take 5 to 10 years. But if you know that, I don't know that for sure, but let's just say that I assume that in 5 to 10 years, it could be 500,000. And then, if I buy it at 58,000 and it was 30,000, then what does it matter? On the short terms, you got to remember, like, investing, and Bitcoin is very volatile. So that's what you have to know right away. So, but usually with more risk comes more reward, right? And so if you're uncomfortable, then you can do it over time. But I would say the on-ramp is not very easy. So it's not like you just go, you kind of have to get the ball moving. You have to open an account, you have to transfer money, that takes time. And you'll see like Bitcoin will dip. You're looking at the hour charts on these things, not like days or weeks. It'll go up 1,000, 2,000 a day in a week. And then in the following week, it'll drop 4,000. But when it does that, it doesn't do that for very long. And then it's right back up again. So it's highly volatile. I mean, most people would suggest, or I mean, in my mind, I think you want to have like maybe 1 to 2% of your assets in Bitcoin. So figure out somehow to do it. If you have and that includes like your 401k, whatever. I guess that's the most basic thing. You should know what your net worth is. What do you own and what do you owe? Figure out what that is. If let's say it's $1 million, then you need $10,000 worth of Bitcoin. You need 1%. Maybe less than that.
And I think for the common person, as they see, like 58,000 a share, that's a bit of a challenge, especially when majority of America out there is struggling even making a car payment, or struggling even having enough discretionary money if there's a windfall, if for some reason you have an accident and you have to pay for that copay just to be qualified. So some of those things that I think we're probably talking on a bigger scale for people that have a little bit more discretionary money. Mm-hmm. If there was something that you could advise people on, and not that you're a financial advisor,
right?
If there was something that you could advise the common person with, as far as getting a Bitcoin, I think Robinhood does offer smaller shares or smaller portions of a share.
Right.
I don't know exactly how that operates. Most of my trading is done through Vanguard, and if you've done anything with Vanguard, they're very historically just slow. They're like snails. They're not part of the sexy stock selling stuff. So whenever I make a trade on Vanguard, it usually takes a couple hours.
That's the popularity. Basically, that's what. So Robinhood is just a brokerage account, and then they decided, like, why don't we just sell partial shares? Why do you have to? What if I want to buy Amazon, but I don't have $3,000? So say with Bitcoin, I don't have $58,000, but so you can go on Robinhood. You can go. I probably would suggest something like Coinbase, one of those apps. And just put $100, whatever is in your budget, put $100. It doesn't really, you have to figure out how much money that you want to invest. But I think everybody should commit some portion. I learned pretty early on that you have to think of yourself as like a business, and your business, you're creating money, you're making money by going to a job. And so what are you going to do with that money? Businesses can succeed or fail based on the CEO, how they manage. And so you go to work and you make a certain amount of money, and the government takes its share right away. Before you even see your money, they take your portion. And so you got to have that same mentality, like, okay, I got to commit some money to myself. And you have to decide, or should I go buy a new phone? I mean, those are the decisions that you have to make. But my suggestion is to take some certain money and invest it, save it away. And then the question is, okay, well, what do I want to buy? So maybe I want to buy, like I was saying, maybe you want to buy a Palantir, like you said, or a PayPal, and that's fine. And then maybe also buy an Apple, and then buy something else like a Coca-Cola, and then buy some Bitcoin. And it doesn't have, you don't have to be many shares. You can have a half a share. Bitcoin will be, so, and the thing with Bitcoin is you don't need a whole lot. So if you own 0.25 or 1/4 of a Bitcoin, you're in the top 1% of all holders. So you don't really need a lot. And that's because each Bitcoin, if you look how it's broken down, it's broken down into 1/100 millionth of parts. And so that may be in the future, could be how we trade. You know, the whole idea is to get as many, 1/1 millionth of Bitcoin is called Satoshi. I don't know if you know that, but so you want to get as many Satoshis as possible, because
there's a whole Bitcoin culture. I know.
And maybe I am part of it. I don't know. But so take that with whatever.
Can I call you Hot Stock Satoshi?
Oh, wait, my new name is Satoshi. But anyway, you don't need a whole lot, and you have to. But here's the thing. What I'm saying is, you have to accumulate assets somehow. If you want to have good financial future, if you want to be more wealthy than you are today, you have to accumulate assets. And it first starts with paying off. So you got to do a budget. You have to, like, what do you owe? Do you owe credit card debt at 13%, and the average stock market return is 8%? Then maybe you should pay off your credit card first. And that's probably something like, if you have no idea what's happening, or then you need maybe talk to a financial person.
Yeah, and
learn the basics.
I mean, if you're a Robert Kiyosaki guy, I mean, you're typically putting everything in debt and leveraging off your debt. So, I mean, there's always a way. I think it's, at the end of the day, it's whatever you're comfortable with, whatever you're able to feel okay with, because it's really your decisions. And no matter what, I and Henry, Yotoshi, little Yotoshi tells you, we're not financial advisors. We're not here to tell you what to do. We're just here to kind of express and share what we know. And no way do we have licenses to sell, give financial advice, but we're here to kind of share in the moment. But as we wrap up today, I think the big learning lesson is to establish your assets. Use the things you know. I mean, establish a business is usually a good one where you can have your taxes, a little bit cushion regarding how much taxes you pay. Starting a business helps facilitate that. Acquiring assets, definitely you can leverage off those assets, make money off of those. Real estate is a huge one. Real estate, you can park your money. It's a safe bet. Appreciation, usually even in down markets, there's usually or typically an upswing regarding that asset. But there's other ways to leverage off your money. The learning lesson is the dollar devalues. If you have all your net worth in a checking account somewhere, you're probably losing money more than you are making money. So just things to look out for and seek a financial advisor for. Not Henry and I, because we're not financial planners or advisors at all. We're just a couple of guys sharing information.
Your word, right?
Yotoshi is what? Yotoshi and I are just a couple.
Sat and I.
Right. You don't like Hot Stock, Hank?
Hot Stock, no.
That sounds so cool.
I didn't even name one stock.
Oh yeah. So what's your stock of the week? Henry, what's your stock of the week, sir? Yotoshi.
I don't have one, I guess.
Oh God. You said Palantir. I am all in Palantir. So like that's my best producing stock right
well, I mean, I think you look at some of what I've bought recently look at the ones that have really fallen. So look at the ones that have come down like 40, 50%. Again, you have to have a bet. So I wouldn't just buy all these, but I mean, you have to look at when the stocks are dipping. That's when you buy. And so if you like these hotter stocks and you think they're going to do well long term, then then you buy them. So
let me go there. I'm gonna go on Bumble. I heard Bumble stumbled like 10% yesterday, and
Bumble,
only because it IPO'd.
Bumble's a little new. It just came out.
I know it IPO'd like barely a month ago.
Well, the idea is that, okay, so the economy is going to reopen. People are going to start dating. And I mean, I like it. It's just so new. It's hard to keep track when you have too many stocks.
We IPO'd at $70 roughly, and we're about 68. Hey, it could be a good buy. I mean, it's fluctuated.
I've heard it's a good buy. Try it, Robert.
I don't have
I bought more Airbnb. It dipped again to I bought it on the IPO, so I bought it around 140, and then it dipped to 183, I think, before, and then it just recently dipped again to 180.
Let's look at the 1 year. This one is about a year ago.
It hasn't been around that long, so that I in general I don't buy IPOs, but I thought Airbnb, I felt like, okay, you know what, I know what, you don't have to explain it, what it is. I know exactly what it is. There's a reopening, people want to travel, and I think they have a good niche for, when you travel and you got a family.
Yeah.
It's kind of nice to rent a house where everybody gets their own room.
Yeah, there's not a whole lot of analysis on it. I mean, again,
it's new, but I mean, it has a potential to be a really great company. Anytime, if it has a verb, like Google, I Google it, yeah. Airbnb, I Zoom. I like those kind of names in general.
I was just looking at the Dow. I mean, I looked at the Dow. We took a big dip yesterday, and it's roughly. Usually, there's a big Friday sell-off in a lot of stocks, and I don't know. NASDAQ.
Yeah, it's an adjustment phase. People are trying to figure out what's going on. They see interest rates rising, but I mean, interest rate kind of have to rise. They can't stay low forever. So once people figure that out, then they will. Go back.
The hard part is like not the common person really pays attention to this stuff. They go to the grocery store, they buy their goods and whatever, they buy their tequila for the weekend there, and then they walk away saying, "Hey, I just spent $5-10 more on this shit. It's getting expensive."
Well, okay. So if you're not really paying attention and you're not watching the prices and you don't, then maybe you shouldn't be in an individual's stock. It does take a little bit of work if you want to do well. I mean, if you're just committed, like, you know what, okay, I'm just going to put $100 and I'm just going to buy Airbnb and I don't care what it does because I'm in it for the long term, then it's probably fine. But I mean, you still have to do some research as to what company is good and what company is not. If you don't have the time, then you can just do ETF, or you can $100 every month into the, SPY, 500 companies. And again, but I think what people do is they, once you start buying, you start looking at it and people get emotionally involved and it becomes like a game. So that's the hard part. So if you buy Bitcoin and it's 55,000 and then it goes to 30,000, and then are you going to feel bad and say, "Oh my God, I'm so stupid, I'm selling it"? Then maybe you shouldn't have done that.
I say that every time we go to Vegas.
if you're going to say, "Oh, I went to 30,000 and my plan is to try to get as much Bitcoin as I can over time," then great. Now I can get a little bit more. I'll put another $100. I'll put $100 because I know in 5 to 10 years that it's going to pay off, and I will make more money than if I don't know, just keep it in my bank account.
Well, the thing I'm worried about, and as we wrap up today, because we're running a little over, Henry. That's how quick things.
Hey, it's the first show,
Yeah, welcome to the show. The thing I worry about the most is that people get this, roughly $1,000 to $1,500, stimulus check, and they think it's like Vegas. Hey, it's free money. I'm going to go turn this over into 2,000. I'm going to turn this over into 5,000. Should I see people making tens of thousands on Bitcoin? I'm just gonna put it all on black, for $1,500 and see if I get it. And if I hit it, shit, I'm gonna try it again. And then just like Vegas, you walk away kind of stupid, right? And that's the thing I'm worried about with this stimulus check. That I don't think everybody's going to do that, but I think there's going to be a substantially large group of people that do that. And it's just going to feed the face and feed into the machine that is the wealth, the more wealthy people out there. I mean, if I'm being frank and blunt, but that's what I'm concerned about. So hopefully, as you're getting your stimulus check, you actually do spend it on, things that you do need, things that do stimulate the economy, not necessarily trying to chase after a dream or chase after that one stock that you think is going to come up. And so as we talk about things, as we talk about wealth, we're here to help you. We're not financial advisors, but we're here to help you. Share a moment, share a story, and hopefully it helps you understand your money and finances a little bit better. Is there any last words, Henry, before we head out today?
Well, the only thing I would say with that is, so you got to think of investing as the opposite of gambling. And so if I go to Vegas, like you're saying, and we go play blackjack for an hour, there's a chance I could win. There's a chance you could lose. We've done that before.
Oh God, yes.
But the longer you stay and you play blackjack over time, most likely you're going to lose your money. Yeah. It's only in the short. And so investing, think of it as the opposite. So if you're going and your idea is like, I'm going to take my money I just got and I'm going to double it and trip. Some people might, and some people won't in the short term. Yep. So, and just know that that's what you're doing. If you're just in it for the short, like I'm going to try to take my 1,000 and turn it into 2, just realize it. I mean, you can get chopped in half, but that's what you're doing. You're gambling. But if you're committed to investing, so that there's a difference between trading and investing. If you're investing, then you say, okay, I'm gonna, maybe I'll take my stimulus check and I'll buy something that I need. Maybe I'll buy something that I don't really need. And then I'll take another part of it and I'll invest it, but I'm going to keep it there for a long time because I know over time that it will make money. I guess that's all I would say to that comment.
I do need some new tires, Henry. So I hope it comes back soon. So as we wrap up today's show, thank you for joining us. Me and Yotoshi Henry. Yotoshi, right? Is it Yotoshi?
It's a Satoshi.
Named
after the inventor.
Sorry, Satoshi. Sorry, Satoshi. I want to thank everybody for joining us. We'll be back here next week, possibly with Henry and possibly Frank. Do a combo kind of arrangement, whatever it is. So join us every Friday here at the noon hour or 2:00 hour, whatever. We're kind of going off on a whim. Rob Morales, RCO Network. Henry Morales from Sacramento, because that's where he's from.
That's where I live.
We'll catch you next time. If you want to catch our Monday show, Monday Market 15, we'll be talking about real estate and kind of the up and coming and the news of the Phoenix market. And then Thursdays are Entrepreneur Unedited show with Kelsey Rogness and I. We'll catch you guys next week. Sayonara, Satoshi. All right, we'll see you guys later.